I wanted to go over something that's taking place right now in the crypto sphere in regards to the corporate adoption of certain specific digital assets as being used as a strategic treasury asset for corporate entities. And so, just kind of here's what we've got. The current reality of June 2025, Masari and other reports confirm that companies like Vivo Power, Sustainable Energy, NASDAQ listed, Weebus International, the China based travel hospitality, and Wellgistics Health, the pharmaceuticals, all publicly announced plans to hold hundreds of millions of dollars worth of XRP in their corporate treasuries. Vivo Power, in particular, aims to be the world's first XRP-focused digital asset treasury and decentralized finance strategy company. The motivation. These companies are doing this for several key reasons. Cross-border payment efficiency for global operations. XRP offers near instant lower cost cross-border payments, reducing reliance in traditional, slower, and more expensive banking corridors. This improves cash flow and operational efficiency. Liquidity management. Holding XRP provides a liquid asset that can be quickly converted to various fiat currencies and other digital assets, enhancing global treasury liquidity. Hedging some companies might view XRP as a hedge against inflation or fiat currency devaluation, similar to how some hold Bitcoin. Strategic innovation, it says here. Being early adopters of the digital asset treasuries strategy signals innovation towards thinking potentially at attracting investors. Access to DeFi. Companies like Vivo Power are explicitly stating their intent to participate in the XRPL DeFi ecosystem, which would involve leveraging their XRP holdings. The scenario here, the treasury rush to XRP. Imagine this becomes a broader trend, building on the initial moves by Vivo Power, Weebus, and Wellgistics. Other global companies, perhaps in similar sectors, and also I would look up ExxonMobil and certain things that are, like there are. So, those significant international operations like a multinational logistics firm, a large pharmaceutical company, or even a global energy giant like ExxonMobil, if they were to seriously explore digital assets beyond international blockchain solutions, decide to follow suit and allocate a portion of their strategic reserves to XRP. Why XRP specifically? Regulatory clarity, U.S. The ongoing resolution of the SEC case and positive outcomes for Ripple provides a level of legal clarity that many other cryptocurrencies lack, making corporate treasuries more comfortable. Enterprise focus. Ripple, the company, has consistently focused on enterprise solutions and regulatory compliance, making it a natural fit for corporate adoption. It says speed and cost. The XRPL's inherent speed at 3.5 seconds to settle for settlements and extremely low transaction fees are unmatched for high volume global financial operations. Built-in features here. Okay, the XRPL's native DEX, hooks, and other features make it suitable not just for holding but for actively managing and leveraging digital assets in a treasury context. Impact on price, discovery, and value of XRP. The adoption of XRP as strategic reserve by global companies would have profound and multifaceted impacts on the price discovery and value. 1. Massive demand influx, buy-side pressure. Direct purchases where companies like Weebus International marked $300 million to buy XRP. That's a direct large-scale buy. The massive demand influx, buy-side pressure. Buy order from buy order from a non-speculative institutional entity. If a company like ExxonMobil, with its vast treasury, were to allocate even a small percentage, say $1 billion out of its hundreds of billions, in a cash reserve, the impact would be enormous. Reduce liquid supply. These companies aren't typically trading XRP for short-term gains. They are buying it to hold as a reserve for operational liquidity. This means substantial amounts of XRP are taken off the open market and held in secure corporate wallets, effectively reducing the circulating supply available for trading. This creates persistent upward pressure on price. 2. Shifting in price discovery mechanisms, fundamental valuation. It says here the utility-driven valuation, XRP's price would increasingly be determined by its real-world utility and the economic activity it facilitates, rather than purely speculative forces. Financial analysis would start incorporating corporate treasury balance sheets, cross-border payment volumes, and operational cost savings into their operations. This that would be huge. So then it says into their operational cost savings into their valuation models for XRP. It says discount cash flow, DCF potential. As more companies use XRP for actual payments and liquidity, it becomes easier for model future cash flows and cost savings derived from XRP usage, enabling more traditional valuation methodologies. Comparative asset class. XRP would start being compared not just to other cryptocurrencies, but to traditional treasury assets like short-term bonds or even foreign currency reserves based on its performance in those roles. 3. Enhance legitimacy and trust. Institutional de-risking. Okay. Seeing publicly traded companies, especially NASDAQ listed like Vivo Power, holding XRP on their balance sheets sends a powerful signal to other corporations, institutional investors, and even sovereign wealth funds. It normalizes digital asset adoption in corporate finance. 2. Regulatory endorsement, implicit. While not direct regulatory approval, the fact that publicly traded companies are able to make these moves, often with the SEC filings as Weebus International did, implies a level of regulatory acceptance further reducing, but not direct to the regulatory approval. In fact, the publicly traded companies are able to make these moves applies the level of regulatory acceptance, further reducing perceived risk. Okay, catalyst for ETFs. The growing corporate adoption strengthens the case for an XRP exchange-traded fund, an ETF. Approval in the U.S. If an ETF approved, as many analysts predict it will be by 2025, it would open the floodgates for even broader institutional and retail investment, providing an even easier on-ramp for exposure to XRP. 4. I'm going to skip to that and just go to the long term. Long term, beyond 2026, if XRP becomes a standard treasury asset for a substantial portion of global corporations, its price could reach multiples of its all-time high, potentially in the $50 to $100 range, as its markets capitalize reflects on roles in global commerce and corporate finance. This would place it among the top global financial assets. This scenario represents a powerful confluence of factors: real-world utility, RWA tokenization, regulatory clarity, and direct corporate adoption as a strategic reserve. Each of these alone is significant, but together they create a compounding effect that could fundamentally reshape XRP's price discovery and cement its role in the digital asset sphere. Kind of just things that I think are good to think about, and this is things I wanted to properly articulate with these fundamentally fun folks out here in the cryptosphere. Enjoy.